Okay, good night everybody. My name is Barry Mohan from awesomecalls.com and welcome to our webinar tonight. Tonight I'm going to be going over some candlestick patterns again. I think we need to go a little bit in depth in some of those. I sent out that video the other day with the candlesticks, but I think I can definitely kind of embellish on that a little bit, especially if you guys interact a little bit, ask me some questions, and then we can kind of go over some more of that stuff a little bit in depth. I know that a lot of you guys, when I requested what you guys wanted to do, most people said that they wanted to go over scanners, but the way I see it is, hey, look, if I give you 10 good trades before they even happen, do you guys know where to enter or exit those trades? So a good trade without a reason to get in or get out really isn't a good trade. All you'll do is look at the end of the day and say, wow, that went up 10 points or something, and how did I miss it? So before you get a good trade, before you start scanning for stuff, before you start confusing yourself, because trust me, the scanner life is not simple. Ask G, he just started. The scanning life is not simple. It will get you more confused, actually. You'll probably be so focused on finding something that you'll end up sitting at your desk the entire day, not trading anything. So before you jump into, I want to learn more about scanners and about finding stuff popping up here and there. You have to deal with what's in front of you. So anyways, that's just the Dow Jones. Let's go over some stuff, and I want you to take a look at stuff. This is JNUG. This was yesterday's into today's run-up. Yesterday I bought here into close off the moving average crossover and really rocked it out this morning overnight. I actually came off 34.50. I closed out this position this morning from down here at 31.60 or something like that. So this was quite a win this morning. Anyways, since I don't want to just open up the entire day yet, I just want to kind of see where you guys are as far as your candlesticks knowledge go. So if you were looking at these two candles over here, I know it's kind of up in the corner, but I'm just trying to hold the screen closed to help you guys. If you were looking at these two candles over here, this formation would be called a what? If you guys can respond. Here's two candles here. What would that be called? A bearish harami, right? So a bearish harami would tell you to do short it, right? Or at least have the short idea. So if you go over one more 5 minute there, you would see that you actually came through on that candle and that it came down. Now that would be a hammer. So you would think, okay, go long. And then you'd see another hammer. So a succession of hammers tell you that the move to the upside is definitely coming. And then there's your upside move, right? Now, with this move over here coming up here, this being a bullish engulfing, what's your next prediction for where this other move is coming? Is it going up to break that high? Up. Okay, Clint says it's going up. I'll give you guys a couple seconds to respond. I just want to get a kind of interaction going, so that way we have an understanding of what we're doing. A few people think we're going up. Okay, so everybody's kind of basically thinking it's going to break up to new highs, right? Okay. Okay. Watch what happens. Doji. See that? Okay. So, what happened technically here that would have wrecked a lot of traders? Bullish harami here. Doji star up here. Another bullish engulfing here. Doji here. Bullish engulfing here again. Right? And what happened here that caused this trade to go down? I mean, if you look at it, obviously hindsight trading, guys, anybody can hindsight trade. Oh yeah, I should have taken this short over here. I should have went long over here. You know, hindsight trading, that's not how we do it, alright? When you see a screen coming across during the day, it's just like that. 1, 2, 1, 2, 1, 2, 1, 2. It's never like, oh, here's a trade, show me where you want to go long or where you want to go short. That'd be stupid, alright? A lot of people do that, and they go, oh, well, obviously you should have gone short here, and obviously you should have taken some long here, you know? Double top. Okay. That's what I'm seeing. Just clean double top. So, in this trade, how I would have traded this. Well, obviously I got out over here, and I didn't really care where she was going. I was just happy with 4 points. And I actually didn't even... Somebody asked me in the room, hey, JNUG came down, and I said, wow, I didn't even know, because I literally was done with it, and I didn't even have a chart up for it. Double top. So, when you see that first top in over here, remember, we're always using these moving averages here. This is the 8, and that's the 13, that's your 50. So, we're always trying to use these moving averages as support, right? So, even if you took this position long, anticipating a breakout of the higher day, then you should have gotten stopped out over here and saved your account from all of this stuff over here. So, but that being said, what caused this pattern to fail? Okay. I'll try to blow this up a little bit, and that way you can understand a little bit of how this candlestick crap works. This candle right here, doji, engulfing, right? Bullish signal. Just between both of them, that's a bullish signal, right? Okay. In order for this chart to go higher, you need an opening above this line. Above that line. Not this line. This line. You need an opening above here. If this candle had opened there, like right there, I mean, I can't even draw a freaking box with this. See? No, I can't. Maybe. If you had gotten a candle to open here, but this is gonna be a horrible little candle. Above the top of this, you would have gotten a more upside move. Being that it opened inside of it, I'll X all this junk up. Being that it opened inside of it, that's what caused your fake out there. If this was to go higher, it had to open on top. And I don't care if it opened on top and it pulled all the way down to even down here from this support. As long as it opened on top, that's when you definitely get the push to the upside. Being that it didn't open over the close, that's why you got pushed back to the downside. Now everything technically speaking here, bullish engulfing, and this would be considered a Maribozu candle, of course, because there's no top and there's no bottom wick. But then you'd be backed up here with a red Maribozu candle, so it's saying strong sell-off. So they definitely couldn't push it over through the top. You would have noticed, obviously, on your stochastics, on your MACD down here, that your MACD was curling down on this candle over here. So if you follow that down, you'll see right at the bottom over here, I'll blow it up. Right here, you see a divergence was happening already. So if you were following this based on the candlestick here and you're thinking, hey, is it going to break out or not, and you glimpse down real quick down here, you'd already see that it started to come down. See, it started to curl down already into it. Okay, also you would have seen in your stochastics that it was already very hot. So it would give you the inclination first that, hey, maybe I want to see a breakout first in the confirmation, or before I went long on that one. And that way you could save yourself some money. Or you could say, hey, I just want to see if it breaks high, and if it doesn't double top, just, you know, like you got to think about like 100 different things at one time, and it'll come to you. It'll come to you just by saying, hey, let me just, you know, think about this for a second before I just jump in. But always remember with the candles, one candle means absolutely nothing. 2 candles start to get you a pattern, but the third candle is going to confirm your move either up or down. Alright, so you always got to wait for a couple candles. I'd rather you wait for 2 or 3 candles or 4 candles for a confirmation of a move, rather than get in long in a position over here and then this happens to you. And some people forget to put stops, so they try to put stops at low of day, which bring them all the way down here and lose a lot of money. Now you're saying why? Because of the bearish engulfing? Well, no, this isn't bearish engulfing because it didn't actually engulf the entire candle. It opened inside of this candle. if I'm looking at these two things here, okay, let me bring it all the way back to the side here, right? If this is how my day is playing, and I see this here, Harami bearish, but then here comes a bullish engulfing, my next visual opening of the next candle has to be over this candle. Has to be over. If it's anything in between this candle or especially underneath this candle, I'm short. But to go long, I has to be over the candle. Because with the candles, you need consecutive type of movement. If in order for this formation here, these two candles formation, this engulfing formation to prove itself, it needs to open above. It needs to show me it can push and open above. Now, if it can't push there, that's what's causing the breakdown. But if you did go long, you would have hopefully have the stop somewhere around here at least and gotten out of that position. But anyways, let's check out another one. Okay, UVXY. All the way down. Okay. A lot of candles here. No, I'm just, this is the 5. I use 15. I use 15 minutes. Oh, 1 minute? No. I use 1 minute only for if something's going parabolic, if there's a fallen knife, or if it's an IPO. Those are the only 3 reasons why I use 1 minute charts. Other than that, I'm using 15 minute chart. Okay. Yeah. Well, that's how you determine where to look for your candles. You're going to look for your candlestick formations around resistance points, around support areas, and around moving averages that mean something. Okay, so UVXY, this is your day coming down, okay, all the way down. You see this huge big candle here. It's obviously a huge bearish engulfing candle. Not only does it engulf one candle, it engulfs 1, 2, 3, basically 4 candles it engulfs at the same time. Bearish engulfing signal that encloses more than one candle is supposed to be a really strong move to the downside. Okay, everybody's seeing this. What do you think happens based off just the candle formation? That's just because you know what happens. It should go down. It should. Okay, it should. Everybody played this chart today, so this was kind of stupid of me to put it up. Sorry. Anyways, so this is what happened. Okay? Doesn't look that big anymore, right? Alright. Let's see what happens here. Let's go through it candle by candle and try to explain what happened. First things first, on my chart, I have right. That's where your fake out stuff happens, and this is where you need to figure that out. At first, when this opens here, and Michael's absolutely right, it opens underneath, pops, and supposed to pull down. It didn't, right? So when you're looking at a chart, make sure you have a few things sticking out at you, like previous day lows, previous day highs, and that's something you should be looking at. Now this is yesterday's UVXY. Yesterday's UVXY. High, low. When I use 15-minute chart, it gives me 2 days. That's all I want to see. I want to see 2 days. I don't want to see just today's move. I want to see yesterday's move too. So my chart, I already had this line here, down here, just from this low. I already had this on my side chart. I already had this printed out on my chart. So no worries, Andrew. Welcome to the party. So I already had this printed out here and here. So when this move happened down today, I was actually looking for, you guys know how I trade. For those of you who don't, main strategy is I'm buying into huge red candles and I'm selling into huge green candles. So this would be a buy point just off candles, and not because it reversed. Not because it reversed at all. but this is just I've talked about this 1,000 times. I buy into red candles and I sell into green candles. So this would be a buy, this would be sells. Any of these candles here would be sells because they're relatively big to the size of the candles that's on this chart. So first things first, for me, I knew this line was down here because I had it pinned there from yesterday. So I was looking for a bounce off this area. No matter what candle came down actually down here, I was already looking for a bounce down here. So on the 15-minute candle, you did get an open down, and it's actually supposed to be a bearish signal, and it's supposed to pull more. The next candle after that, I'll throw back on the 5 minutes. Let's get it a little less confusing. Candlesticks get a little bit confusing, but once you really grasp it, it simplifies itself, alright? So down here, this signal over here telling you it's got to have more downside. This signal right here is a bearish harami. It's supposed to signal more downside. So you're thinking these three candles over here is telling you more downside. This candle here opens under this bearish harami, signaling more downside. Your reversal candle, your first reversal candle on this entire section over here is this here. Right there. That candle. That's your first reversal candle. Now you're waiting for a confirmation of this reversal candle. Harami, bearish. Open, under. Still not in. You're still not a signal to get in. So if you went with candles all the way up here, your only entry as far as candles go is here on this 5-minute chart. If you did 1 minute, it's going to have a whole different effect. And it would have given you a signal a lot earlier to get in. But I don't do 1 minutes. One-minute chart. Big down. Hammer, hammer, engulfing. Let's see. Inverted hammer. Retest of the double bottom, basically. Retest of the double bottom. Not to the point, obviously. And then you'd go long of this here, of the harami. So on the 1 minute chart, you would actually have a way better, quicker entry than I would have. Because I didn't even get in this low. I waited for a couple candle confirmation. But obviously I'm on the 15-minute chart, so it's a whole different ballgame. So if you were doing 1 minute candles, you would have actually gotten a way better entry on this one, just based off candles. And you would have had a way better fill than I did. But I don't use that. I use 15 minutes, so for me it gets a little more spread out. Then why do I use 15 minutes? Because I don't play for the scalp. I don't play for that 10-15 cent move. I play for a trade. When I get into scalp mode, I'll throw it on a 1 minute every now and then. And just to catch the move or to nail a move to the bottom, a knife or a parabolic move or something. But for when I trade, I don't scalp trade. My thesis isn't scalp trading. I don't teach scalp trading. I wouldn't tell you, hey, jump in here on this candle here and get out here for 10 cents more. I don't teach that. I want to teach you how to set up for a perfect trade and for a long-term something that'll get you points, so it'll actually make you feel like you know what you're doing. Because anybody can say, hey, jump in here, scalp it for 10 cents. Jump in here, scalp it for 10 cents. If you can read the L2 and you see there's more bids than ask, obviously you jump in there and you scalp it for 10 cents. You can do that. Fine, I'm not adverse to scalping, but that's not how I want you guys to learn. Or if you properly want to learn trading. It's called trading, it's not called scalping. So there's a lot of people that scalp all day, sure, and I'm not saying that you should not, but I try to do trades versus scalps, and 15 minutes gives me an extended time where I can see the entire thing playing out, rather than I got in here and I got out here, so that way I can catch all of this. And if you followed me today in the room when I was here, over the 50 I added over the high of day from yesterday over here. It's not on that thing that I sent out on Twitter because it was just, I tried put in all those little arrows in with words, and then the whole page was covered with stuff. Because I actually went long on this one, and then I nailed some short too. But actually sold into after this candle here and this drop candle here. That's when I came out the full position. But so that's why I use the 15. And if you follow the strategy that we've been on, you'd have gotten into this position just simply off the strategy. Forget lines, forget anything else. If you had the two lines over here, the 8 and the 13, you would have gotten into this trade at $27.70. So if you were just using the strategy from last week's webinar, yeah, you would have just gotten in over here without reasoning for anything else. But hey, the two lines crossed, I'm going long, and that would have been your trade on that. Can I talk a little bit about Fibonacci? It'd be great, Will, if I could talk about Fibonacci, but I am not schooled in Fibonacci. I know how they work basically, but I'm not down with Fibonacci like that. I know like it's supposed to come down a certain percentage or whatever, but dude, not like I look, I can pin that on here. Let's see. Fibonacci. See? I don't even know which one to use. Yeah, no, I can't teach Fibonacci if I don't know it. I'm sorry. Yeah, retracement. Okay, so then you pin that point and then you come down to the bottom. I have no idea how it works, honestly. I can't teach something I don't know. Did I enter this trade using yesterday's low? Yes. Bottom line? Yes. I nailed it off of that. And if you trade with me in the room live or whatever, you'll know that a lot of my reasoning for getting into a trade is broke yesterday's high, lowered in yesterday's low, double bottom off yesterday's low, something like that. Even if you bring this line all the way back across, you'll probably see, look, it tags there, it tags here, and you'll see how important that line comes into play all through the chart. I mean, I could bring this out maybe even a few more days, and you'll see that those two lines, you see, over here, over here, over here, over here, over here, all the way over here. If you bring it out all the way down here, all of these points, and the top line that we drew, see, over here as support. Look at that one, right to the penny, over there, over there. I mean, like, if you take your time and you do just like 2 seconds of chart work before you enter a trade, like even if you wanted to jump into this trade, you can just do 2 seconds and go, hey, you know what was yesterday's, you know, or like even if you were in the 1 minute and you didn't see any of this. This is why I don't use 1 minute. It's too much noise. Even if you were seeing this happening, right? So you're looking at this chart. I'm not saying that you knew exactly where the bottom was, but if you just scroll over for a second and you say, hey, what was yesterday's low? Oh, right there. Well, maybe it'll have a chance of finding support there because it did yesterday. Why should I think that it should not do it today? I mean, did I think this was going to happen? Hell no. I did call 32 in the room if it broke, and it actually came up to 31.49, somewhere around there. So, but yeah, if it found support here, strong support, then you should think, okay, maybe it'll find strong support again over here. So just do a quick check for any trade that you want to jump into, and see where the other supports were, where the other resistances were, and you'll be amazed to see, like I just showed you, how much instances that these two lines have served as support and resistance throughout this entire chart. How did I know 32? Gosh. It was really just me just doing something like that and then having it come up here, and I was thinking it would come up to this area and just break through for a little bit and give a head fake, and it kind of actually did, but it was just kind of basically off this trend that I was playing with. Alright, so that's that. Let's do a couple more candles. Okay, VRX, open. Boom, boom. Bearish Harami. Next thing would definitely be, okay, well, it's going to come down, right? Next candle fakes you out and it goes up. The reason why, because it didn't open underneath. If it opened underneath, it would have gapped, it would have pushed and then pulled. Next candle, still going up. Next candle, still going up. Okay? Up top here, what do you see? You see a dragonfly up at the top over here, or even a hammer, a hanging man up top there. Bearish engulfing. And here you go. You start to see different types of candles coming in, right? So we can go over some of those before any of the move actually happens. Same thing happened in JNUG. Remember that other move and it came back up to the top, then it fell? So this one is slightly different because it never actually double topped. So, and don't get me wrong, candles are great. Are they foolproof? No. If they were, you know, we'd all be crazy rich. Do formations always work? No, they don't. And they can fake you the hell out. And I've gotten faked out many times by formations that were like technically sound, and then they just don't work. Like haramis or engulfing even, or even strong candles like Marubozus that just don't work. So they are not gonna be candles are gonna help you. What I'm trying to teach you is like they're all tools in your toolbox. So you can't use a hammer to turn a screw. So in that way, if I give you an assortment of tools in your toolbox, then you can attack a job a different way. Or maybe if this certain tool doesn't work, then you can utilize another tool. So basically, first we did with the candles, and then we did with the moving averages, and then I wanted to try to talk a little bit about the candles because I feel like there are so many things in that video that I wanted to embellish a little bit on, like the reasoning for certain movements. Like in the video, I couldn't talk about if you see a candle and then you know, like an engulfing next to it, the other one has to open underneath in order for it to, you know, like be bearish, or on top for it to be bullish. So I couldn't really, I don't think I could have really grabbed all of that in the video, so I figured I can throw some of that out here with you guys. But like, okay, for instance, in this formation here, you see a harami right there, a bearish harami. See the point to this coming down here is the fact that this next candle opened underneath. Now formation candle wise, you know, that's a perfect formation right there for a short. Those three right there, that'd be a perfect setup for a short. And have I seen these type of things fail? Yes. But you know, for the most part they do work, and that's why they have books out there about it, and that's why I've been successful trading with it, because for the most part they do work. Now if you were doing just that formation, that's the moving average strategy that we've gone into, then you would have even gotten into this trade short over here with the moving averages crossing, and you would have still caught a lot of this move all the way to the downside. And then if you had gone into it over here, you would have caught some of this here. And you probably would have come back into it over here, and you would have caught a lot of this move to the upside here. But that's just with the moving averages. But with the candles alone, I just want you to try to understand how to see some of the candles. And I guess we can go, I have a couple of them. Like in this one over here with calm. This traded today. Right down at the bottom, you would see what would be a star, and then a huge bearish engulfing. But then she goes to the upside. Like, how come? You know, it broke the 50 down here, and then the other candle closed under the 50, but the move still pushed up to the upside. So technically speaking, how did this happen? I can't say, but there was a ton of volume that came in right at this moment over here. So I haven't even checked this out. Yeah, short cover did that. I haven't even checked it out, honestly. But let's see if there's a reason for that line right there. Let's see if it makes a place in this chart anywhere else. And not really. It doesn't even come into play. So that move right there could have just been a drastic short cover that pushed it back up and then caused that formation right there. I'll bring it back to 5 minute. So do candles fake you out? Yes. Should you rely your entire trades on them? No. Should you use other things to help your trade? Of course, yes. And so, I mean, now you have like the candle stuff, you have the moving averages, you have the support lines. Just glimpse back at yesterday's stuff and you'll see. I mean, if that line actually kinda was in this area over here too, kinda support from that bounce over there. But you can see that once it broke that, it really just kinda came down quickly on it. Okay, so what am I getting at with these candles? I just want to show you some other stuff. Because I'm actually kind of showing you candles that fake. More so than candles that work. Gasper, what's up, buddy? Because I think showing you a candle that work, I can show you 1,000 of those. Showing you a candle that fakes you out, I think actually prepares you for some of the truth that's out there. Like with this move, ETP. This was one that worked. Right there, bearish engulfing. And then the other candle actually opened at the bottom. Right, you see it opened lower than the close of that candle there. Right? So how to trade this if you're trading this one? I'll tell you exactly how to trade it. And it's not going to come to you right away, but you're going to figure it out. I'll X out all this stuff. Okay. Here's the formation. You're thinking in my mind now, I want to be short. Where do you get into this next candle over here? The minute it opens underneath and pops. Now, you cannot allow it to pop over the high of day, obviously. This is such a short little area here that I just have to use the high of day as my stop, right? You let it pop, and it actually double tops itself by not breaking high of day right over there. So, the minute it opens underneath, and you want to go short, you want to get your highest price in, right, for your short position, you let it pop on you. And then you short it. If it went over this high of day, you leave it. Okay? So you wait for it to pop. Make sure it does not breach the high of day. And you catch that short during this wick over here. And that's where your short position is. And that's where your stop is up top over here. So the minute it opens underneath, you say, okay, I want a short. Do you wait for it? No. You nail it up at the top over here after it has tested the top but didn't break and coming back down on the way down. Because what happened with this candle is it opened here, it pushed all the way up here, and then it started to pull back down, and that's where it closed there. So that's where you would short this. Your entry would be somewhere in between of this wick here, and your stop would be high of day. Yeah, I use 15 minutes all throughout. I kind of hardly ever change anymore. Corey. But it's something you got to get accustomed to. Don't try to jump into 15-minute candles just like that. It took me a while to get into it, and yeah, it's kind of boring sometimes. But I have 24 charts, so it's never really boring, and my scanners keep me busy 24 hours, so it's never really boring. To because I don't sit here and just have one chart up like this. Yeah, 5 minutes is fine. And that strategy that I gave you guys, the 5 minutes, really works well if you just want to get in and out of a position. That crossover strategy, it works really well. Terry's been using it religiously for the last couple days, and he's been banking hard. I mean, like, even if you went short on the 5 minute chart off of that strategy, your short would have been right here on that MA cross, and then it never really crossed back all the way to like down here. So you would have been short here, and you would have been covering all of your position right there. So even on the MA cross strategy, you really would have nailed this one. I mean, you would have. There's a couple ways to get in and out of this position. Obviously, you know your in was over here, or your in is over here, and obviously you know your out is when this trend line breaks to the upside, and your out would have been here if you were using just flag formations or trend line breaks, or your out would have been here if you were using the MA crosses. So a couple ways like this trade over here. Now a lot of people are asking me continuously, how are they supposed to focus on so many things or so many different trades? I say don't. Pick a couple stocks that you can afford first of all. I'll switch it back to the 15. Pick a couple stocks that you can afford. If you know your range is within, I don't know, 20 to 40, or if your range can be within 50 to 75 or 100 and over or whatever, pick a range obviously that you can afford. So say you like that, let's say that 50-ish range. You know right off the top that you should be looking at a few movers. You're trying to get movers, right? So you look at maybe like AMBA. You could, well, VRX is 90s now, so I guess that's out of your league a little bit. COM would be in that range. AMBA would be in that range. What's a like a $50 stock? Blue is down there again. Yeah, blue's in there. So you're looking for a few stocks that would give you the price range that you want, right? So it's $50, and say you don't have a ton of charts. Maybe you can, instead of using one chart for an entire screen, maybe you could just break it down and have a couple charts. This is just the way that I do it, so when we're in the room I could see the L2, a side chart, and the chart that I actually trade off. But I do have other screens, so this really doesn't apply to me. But say you don't have a lot of screens, you could probably just have maybe, you can even have smaller charts. You could just, shrink them up a little bit and keep some side charts up. Don't be scared if you can't see, all the moves on the charts. Just make them a little bigger or something that can help you. But if you use the moving average strategy, my moving average strategy, if you use that, you don't even see these. I don't see candles anymore. I see lines. So I see a red line crossing a white line, and that's it. You know what I'm saying? So on your side charts, like, that's all I look for. I don't see the candles anymore. It's like the Matrix. I just see the lines. So that's how I get my first visual. The freak? That's how I get my first visual if to buy or sell a particular stock. Okay. Yeah, so I was just trying to go over some of the candles and how they can fake you out, or how they can help you with a trade. So I don't know if I accomplished that. But anyways, give me some questions. MAs do not work well on 1 minute charts. No, don't use that strategy if you want to do 1 minute chart. It'll fake you out every 10 seconds. It'll just commission burn you and you'll be crying. Don't use it on a 1 minute chart. You may luck out with a chart that goes really far with it, but for the most part, don't use it on a 1 minute chart. In and out, in and out, in and out, in and out. You can't play like that. You can't trade like that. Okay? So don't use it on a 1. People ask me about the 3. I said, okay, maybe you can try the 3. But I don't recommend the 3 either. I think there's too much in and outs. And this is what I call chop. And this is what I call chop when it's up and down, up and down. 5 minutes, I would say you can rock that. I would allow you to use the 5 minute, but make sure that when you're in the position, you don't marry the stock. Don't expect it to be one of those where you can really ride all day long. Unless it rides with you, then move with it. But I would say on the 5 minute, just get in, make your money, get out, be happy with it. I choose the 15 minute because I'm in here for a longer term play. So once I'm in, I want to make sure that my trend stays a certain way. If I'm looking at a 1 minute, it'll just be like, you know, I don't know where to get in, I don't know where to get out. So in this way, I can see a clean picture, draw a trend line right down here. I know that big boy right down there is sitting down there. So once this price actually comes back to this area over here, I'm already looking for it to either hold support or break and add to the short position if I was playing this. Will the moving average strategy work on cheaper stocks? They work on any single stock you got, my friend. Let's do a penny stock. Let's do mine. 15 minutes. Obviously, it's not enough volume on this one, so it does get a little choppy. Give me an OTC stock or something that you're talking about. That moved. I know that one. Okay, that was today, but okay, I could just run through my OTC scanner and pick up one. Okay, let me link this. Okay, that's MUX. I don't know what the hell that was. See, a lot of these smaller ones, obviously, it's gonna fake you out a lot. Damn, it's horrible. I'm trying to run through the scanner to see if I see anything, but it really isn't coming up with anything. You got anything that's under 5? Soon, GBSN? Okay. It'll work for anything. For any single stock that you've got. Obviously, these type of stocks move in a different kind of, you know, up and downs type thing. But it works the same way for anything. Oh, they're on the other video, and if Bernie, if you have not looked at that video, I don't want to ruin it for you by just telling you what the MA strategies are. If you have not seen that video, I'm not just gonna tell you it. You gotta watch that whole video, because anybody who's here or anybody who follows me knows that that video could possibly be one of your trade changing videos. So you gotta look at that one. It's on the YouTube channel. Soon. See, soon was perfect all the way up. Once it crossed over, it really just kind of chopped down there. It could be any trade, really. I mean, it depends on the stock, how it moves, or you know, I stay away from chop. I stay away from charts that do this, up, in and out, in and out. Look, if a trade is gonna give me chop, which when I say chop, I just mean the up and down crosses of my moving average. If a trade's gonna give me chop on a 15-minute time frame, I don't want anything to do with it. If a trade's gonna be really clean on a 15-minute time frame, that's the only kind of trades I want. That's why I pick stocks like VRX and UVXY and Blue, Amber, Kite, Tesla. You see how smooth those lines are? They don't fake you out. Alright, they give you clear signals, and you can work with them. Either you're long, either you're short. I mean, very, very clear, simple signals. I don't play with choppy stocks. I don't want to play with anything that'll make me lose money. And now I got a blank screen during a webinar. That's fun. Okay. I wait. Oh god. It better start back. What am I doing for intraday scans? Okay, so I use what time is it? 9:43. I use trade ideas for most of my scans. A couple of them that I use obviously are my own, but trade ideas can give you a wide range of scans and scan settings that you can get intraday trades off. You have to obviously know what you're looking for. You have to have a strategy set up for yourself that, hey, this is what I want, or if I'm looking for a specific candle pattern or something, then you can use your trade ideas to try to filter you some stuff. So even if you just wanted to get an alert for a stock that crosses over the 50-day moving average, you add that and you click it there. This is just, I'm giving you a basic rundown. If you wanted a stock, you click the obviously the exchange that you want to use. You see a summary over here, and there's a couple more things that you should add on these, but obviously it's been a while since I've made a strategy. Okay, you'd wanna add price. Say you only wanted a stock that was from, you know, $25 to $75 or something, and then so you just make up a bunch of strategies that you want, and Clint, you just downloaded Trade Edge's trial. Okay, cool. And then you hit OK, and then during the course of the day, obviously this isn't live, so I can't show how any of it works actually, but on all of my strategies are linked. Like, say this is linked with orange, my main page is linked with orange. It does come with predefined, yeah, it does. They have a lot of predefined ones, and I've used them at the beginning because it was just so confusing. But like this strategy I just made up here, really simple one, price from 25 to 75 and over if it crosses the 50. So then, like, I'll double click on that and then it will jump on my, what is going on? It'll automatically supposed to kind of show up over here. Everything that I have is linked. I'll just gotta keep talking. Everything that I have is linked on my system, so whatever I click on my any of my 6 scanners, they'll show up. They're all linked in orange, and then my main page is linked in orange. Maybe it's just because I have so much stuff running here tonight. I don't know. They're all linked in orange, all my scanners, and then my main page is linked in orange. So if I just double click on any one of my stocks that scan, like I'll just like right click on it or left click on, just regular click, it'll just jump up on my main screen. I have no idea what's going on with this. I just feel like I have too much stuff running. I have tons of things running. I have side charts. I have like 3 windows open. I've got this recording thing going on. I don't know. Maybe just too much stuff. I don't know. Not cool. Okay. Yeah, everything is interconnected. Everything, all my scanners, all my screens, my quick buy buttons. Like if I wanted to buy something right there, right click, I buy that, set a stop exactly right there, whatever. Just like one click. I don't have to open a window. I don't have to click that trade button. I don't have to do any of that. If I have time and I'm just kind of searching for an area or something, I can click on my trade button and play with it. But everything's really set to trade. Like if this is coming down real hard over here and I see a signal that I want right there, I'll just go click here, buy. Obviously that's already sent. I gotta cancel that now. Hold on. So there's no hours open, so right, I can click whatever the hell I want right now. But yeah, it's quick. So that's how, like, when I tell you guys, okay, something's going parabolic, and I just pick it up on my scanner, I'll just like this is, let me see, I can just grab something off my scanner. That's me just clicking on my scanner, and you know, as fast as I can click that, and I can buy right from my scanner too. I just have to right click on my scanner, and this shows up on my scanner also. Actually, you know, if I right click, no, if I right click on my scanner, it just says buy or sell, so that's even faster. So I can just buy right off my scanner if something's going parabolic and I see it crossing over a major moving average with surge of volume, something like that. I could just buy right off the scanner without even clicking on the chart. But once I click on the thing on my scanner, it automatically links to this over here, my main chart, and then it'll show me the chart anyways. But I just need a glimpse of it to know if I want to be in or out. By right click, am I buying market? No, everything's there's the stop, there's a sell limit, and there's there's both of them, but they're all limits. I don't do market. Once it comes up on that window, I have the option to change it on my thing, but I only have limits on my thing. I rarely choose market orders. Really rarely do. Funny thing is when I do market orders, like say I wanted to short this thing and I hit market order to short up here, for some reason it'll fill me down here. So I don't know. I never have luck with market orders. So I hardly ever do market orders. And the way that my strategy is, and the way that you'll learn how I trade is, you hardly need market orders, because it's either a stock comes to where you want it, or you don't want it at all. So a lot of traders in our chat have I've waited for a stock for like hours to come to where I want it, and they're like, how'd you know it was coming down there? Just cause. And how'd you have the patience to wait for it to come all the way down there? Just because that's where I want it, and if it doesn't come there, I don't want it. Do I ever use trailing stops? Only when I leave the house. If I'm in a really good position, like say I took this short over here, right? And say this thing broke the 50 over here, my stops is automatically over the 50 right away. It's over the 50. Once it breaks and closes another candle underneath, my stops is automatically over the 50, right? Say I had to leave the house at this point on a stock like Netflix, and she's kind of going down on a strong SPY red day. I would probably put $1 trailing stop and just see what happens. But it's not something that I love doing with trailing stops, because I've also gotten messed up with those too, where I'd come back and I'm like, damn, you just stopped me out for less than what my trailing stop was. So I don't know how they really calculate those sometimes, but I mean sometimes they've worked for me where they've really kept me into a trade, and I come back from picking up my kid from school or something, and I got the full brunt of the trade, which really worked nice. But sometimes you'll end up with a choppy chart that'll screw you over. Sometimes you'll end up with a nice smooth chart that'll keep you in a trade forever. So it's really finding the perfect trade. If you found this trade up here, would you think it was going down here? Probably not. I was, if I've got into this trade here, my first exit I'm looking at is right on the 50, because I'm looking for support right here. So when something like this happens, this is where if you left the house and you did have a trailing stop, you'd be happy when you came back, because you would have gotten stopped out probably somewhere around here when it came back up, hit your trailing stop. So on a move like this, even when it bounced off the 50 and came back down to the 50, I would have actually been looking for support here. And for the most, I would think that this would go down. Just looking at that chart, what is that? Looking at that chart, you'd probably think maybe right there, because you had support here pre-market, and you had support there right at the market open. You would think, okay, maybe that was even the lowest that you were going to get out of this chart. So for something like this to happen on a chart, you would be happy if you had a trailing stop and it didn't trigger until all the way up here. At least you would have caught most of this move till here. How do I use news with chart analysis? I don't have a it's sad to say this. I don't have a news feed at all. I don't have any streaming news feeds. I only have my scanners, and they can pretty much tell me what I want to do as far as the price action. Can I tell if there's actual news on something? No, I pretty much hear it from other people. Or if I really want to know what's up or something, I'll check Twitter. But But in our room we got Wall Street Warrior, and he's as fast as you can get, so I don't really need any news as long as I'm there, I guess. But I don't have a news feed. I don't trade off the wires. I trade off my charts, my scanners. So everybody's got something. Hey, look, some people could really be good at trading off the wire, and I'm not saying that that's wrong. I mean, that's great if you can read a PR real quick and make a decision. That's great, but it's just not the way that I trade, and I think I have enough going for me with my scanners that I don't need anything else. So I'm pretty confident where, you know, that I can rock it without wires. I mean, I can sit here and make my own trades all day long. So I don't really need anything else confusing me. I've even decided to break down some of my scanners. I'm probably gonna have less scanners now because I get so much info from one of my scanner over here that I hardly even watch the other ones now. So I may actually just kind of throw some of them out. My scanner is my most important one, and then I do have break and moving average scanners. I even have one for breaking over VWAP or under VWAP. And if you're setting up trade ideas, try that one. That one works cool because it gives you a good signal for this move. For our, if you want to implement that into our strategy, try that VWAP one on trade ideas. Use it at the same time frame that you use in that you trade with. If you're using 5 minute, use it in the 5 minute breaking VWAP up or down, or if you're using the 15 minute or whatever time frame you use. There's a setting on the VWAP on trade ideas that you can catch the move kinda actually as they're crossing. So you could just be sitting down and you see them coming across your scanner, you just click on it, and then you can see this move happening here right at the cross before anybody else does. So it helps. But I just have so much stuff going on that I don't catch all of the moves. I wish I could. But then you see, I don't just trade off these lines. I trade off candles, I trade off trends, flags, you know, a lot of different things. So I'll probably catch this move down at this double bottom here before this candle thing before the MA's ever even crossed. So in some cases, you know, you just have to have the right tools for the job. Trade idea scanners. And my scanner is just kind of proprietary. No, the charts won't. The charts do speak. I've gone through this many times where charts do speak to you, you know, and you just gotta understand what they're trying to say. Like a set of dojis at the top of a chart is telling you, hey, I'm tired. You know, I need a rest. I'm gonna pull back. Or a set of hammers at the bottom is telling you, hey, look, we're the bulls. We're ready to fight for this. We want to go up. You know, so the charts do kind of speak to you. And you just gotta let them talk to you. You know, if they're doing what you want them to do, then let them do their thing. A lot of people are having problems with exiting early on a trade, and I think that your moving averages are gonna help you stay into a trade a little longer. Like say you were in this trade over here, and you rode that 13 all the way down, you'd be safe, right? So I think that you need to have a reason to get out of a trade. And obviously it applies for any other stock out there, but you have to have a reason to get out of a trade instead of just exiting the trade, because you can be happy with a certain position or a certain amount of, you know, you hit your daily goal or whatever and you're out, but you don't ever have to exit a trade unless it tells you to. Take care, Russ. Thanks for coming, buddy. Yeah. Yeah, I do set alerts for for moving average crossovers. What really sucks with trade ideas is because I have so much specific stuff that I want to put on that I would rather find another scanner system, because I just want to literally type in my settings and let it scan for that. But they have this, like, they have their own numbers. They have like 8 and 20 and stuff. I wanna put the 13 in there. I wanna put I wanna put specific thing in there. Eddie, I hope I kinda helped you with the candle stuff. Not really. It's a lot to learn on the candles. Um, and it's not gonna be, you're not gonna know it right off the bat. When I started seeing stuff like even just the names and whatever, the names not so much that I care about is what the certain, like, when you look at this, you see a hammer right off the top, right real quick. You see a shooting star, you see shooting star, harami, engulfing. I mean, you gotta look real quick and be able to see these things. And no, not so much the names, because who cares if this was called frog and this was called rabbit? Who cares? It doesn't matter what the names are, but the fact that you know what they do. Right? You see a hammer down at the bottom. If it was a frog down at the bottom, you know that the chart was supposed to reverse. So I don't care the name of them. I just care what they do as they pertain to a chart. Alright? So you don't have to learn the names. I don't care if you say harami, haramai. I don't care what you call it. And I don't even know if I say it the right way. But you just gotta know what they look like, and you just gotta know what they can do to your chart. And that's it. That's it. So just kind of grasp the idea of seeing them visually, and what, they're not gonna be like, okay, oh, I see a hammer, I'm gonna go long. No. But I see a hammer, I should be looking for a long. So now you put your stop on the short side, and you say, hey, let me think about this now. And then you start changing your ideas into, okay, what can happen? What's the reason why I would like to change this trade? Okay, let's stop for a second, draw a line, there's a trend. Maybe if this breaks this trend, since this hammer's here is telling me, hey, maybe I want to slow down on the sell-off. This doji is telling me, hey, maybe I want to slow down. This engulfing's telling me, hey, maybe I want to reverse. And then you break the trend to the downside. So now this hammer over here didn't tell you to go long, but it gave you the idea to maybe slow down on your short. So you were adding down here. You know what I'm saying? So this hammer here prevented you from thinking this chart was going down here. So it doesn't yet necessarily tell you, okay, we'll go long instantly. But it does say, hey, buddy, wait, slow up a little bit. Don't add anymore. Let's see, maybe we want to break this trend and we might want to just go up instead. So this candle over here, the succession of candles down here, are telling you that the selling is kind of dying off. And that obviously when you see these candles coming in, then, some buying's coming in. And then you'd obviously watch some of your other indicators, and you'd see that obviously even down here, it was curling upwards when the price was coming down. So you're obviously seeing some sort of divergence over here. Alright? Besides the Dow Jones, I haven't seen you use a daily chart. I do. That's how I scan for stuff, or check my own stuff. But I wasn't using a daily chart for reference for today. But I use them all the time, and they work with daily charts too. But it doesn't really matter if I use the daily chart or not for the candles, because a candle in a 1 minute or a candle in a daily or a weekly or monthly chart means the same thing. So it doesn't really matter what time frame. Right hand? Oh, I look for dailies. Oh, all the time. All the time. Like, let's look at JNUG. Oh my god, if it comes up. I love Scottrade Elite. I've been using it for a long while, and you know what? They may not have like the best supply of shorts or whatever, but I'm so used to the platform now. It's like I can literally just do magic with it sometimes, and I feel like if I was just about to, I also have Short Trader, and I also have a TD account, but I do the short trader one for my swings and my short pigs, and the TOS I do for like just like some swings and some other smaller stuff, but it's not something that I even open every day. This is the one that I use every day for my main trading. But anyways, you were asking about the daily stuff. Look at JNUG down here, breaking this main trend to the downside. And today was the first day it actually closed above the trend on JNUG. So you got your stochastics curling up, your MACDs curling up. So definitely be looking at gold. I think last week, this Sunday went by, I was saying to look at gold for a move up to 40. So we'll see if we can get a push up this. But it definitely broke the trend on to the upside on the daily chart. So I do use a lot of daily charts for reference. What else? CNX, OAS. Yeah, we're gonna see how they do. Terry, with the oil stuff. Charts are being really slow tonight. Not understanding this at all. This is crazy. It's like the longest I've ever had to wait for a chart, and just when I'm having a webinar too. So when a stock like JNUG breaks the downtrend, yeah, probably too many things open. I can probably close up some stuff. Probably. I never really had this happen. Not like this. Never had to wait on something for so long. Ever. Look. It's not even coming up. Oh, my bad. Apparently Terry, the USO, OS, none of that stuff want to work for you. Oil stocks do not want to work. But look at FCX. It'll give you the same idea here. You're over here, down here. Okay, we got couple different signals going on over here. We got a bullish harami down at the bottom. We kind of got an inverted hammer down at the bottom too. And if you look right over here, you get a very similar two candle formation pattern. Very similar here, very similar over here. Alright, had a pretty nice run up over here. So could this go to 1070? Maybe. Alright, but keep that in mind, alright? Oil's beaten down, everybody's crying about it, so you know my rule, when they're crying, we're buying. So just think about that for a second. You know, just look at it and see maybe if it makes a move up tomorrow. Or, you know, within the next couple days. Too many things open. Do you go long intraday? Do I look to go long intraday? Oh, yeah. Like you know what? Like JNUG today, I was done with JNUG. What? Okay, I was done with JNUG. Remember yesterday I overnighted this thing at 31.60. I was done with JNUG at the first push at the open. I was out at $34.50 right here. First push at the open, I was out of JNUG. And I literally closed it down. And so I didn't even see all this. I think I was looking at what was I was trading UVXY and what else was I trading at open? I did UVXY. I know we did Lulu. Something else I was trading at open. I can't remember now. What was that one that ran a lot? No, not Didi. Didi kind of gave it to me a little bit. Okay, so I shorted some. I covered some, but she gave it to me a little bit. Nah, I don't trade soon. Well, nah, unless it's really like at $1.60, I'll trade soon. I just don't feel like soon helps me out a lot. Oh my gosh, what did I trade right at open? Win. That was the one. I traded win. Yeah. What made me go long on JNUG? Oh, thanks a lot, Dark Knight. Got everything on what I traded. Win was it? UVXY, win, and JNUG. That was my first 3 big trades for the day. I was pretty much done after that. Everything after that really just kind of commission burned for a little bit. DD ended up pushing too much for me, and I literally just left it alone. If this chart would come up, I cannot believe this. DD just went too fast on me. What is going on? Okay, apparently half of my charts don't want to work. Huh. If holding position overnight, you usually wait till after the 30 minutes to enter a trade. If not holding a position overnight, do I usually wait till... No, it depends really on it depends on a lot of things. You know, what time you enter a trade. I mean, most of you guys know that... Maybe I get one chart to load. Most of you guys know that I don't like to trade right out of the gate. I usually sit back for a little bit. 3 out of the 5 days, I sometimes won't even take my first trade till about 10 o'clock. On the other 2 days, either I'm overnighting something like JNUG tonight, or there's like a move where it you know, it gaps up and then it pushes out of the gate. Then I'm looking for a short. Or if it gaps up huge, you know, some, you know, like a FDA type thing or something. On most days, obviously, there's something that's to play out of the gate. But on most days, I'll be sitting here drinking my coffee, honestly. When everything's going on and the room's busy and everybody's doing something, I'm just sitting here sometimes watching stuff. And just... Now I totally got no screens. I'll just be sitting here sometimes watching stuff, drinking my coffee, and just chilling. And I'll be just noticing things. I'll watch directions of SPY. I'll watch directions of bios. I'll use my investing.com website, and I'll look into gold, and I'll look into oil, and I'll just kind of see where they're trending before I even take a trade. So I don't rush into it because, you know, the whole day isn't right here. You got all of this. So if I missed the first 10, 15, 20 minutes of the day, it's fine. And sometimes you wait 4 hours. Sometimes you can wait all day, and then like it'll be like 20 minutes before closing, there's like a parabolic move or some kind of crazy thing. I'll make your whole day. So you just wait for it. Patience is part of this game. If you're impatient, you'll lose your money. So be patient. Be patient to enter and be patient to exit. But be patient to enter, because that's very important. Everybody, you know, bell rings, ding ding, 9:30. Everybody's like, oh, I gotta be in a trade. You don't have to be in a trade. You don't have to do anything. Okay, and if you miss a trade, it's okay, because there's gonna be 100 more that's gonna come. So just be patient. What made me go long on JNUG? If I can get a chart up, I would show you. Okay. Okay. I was playing I'll show you a couple reasons, but there's a support down here I'll show you. But for that day, I was playing this trend break here. See that intraday trend break? Then right as it broke, I got in right there, 3160, right? Right as it broke, the MAs also flipped, right? And I've noticed that with this strategy, when they flip late, I'm talking about like late into the evening, on a decent, you know, a decent flip over, they kind of hold through the night. And I've noticed in not just once or twice, but a few times, that when they do flip over, sometimes you can hold it overnight, and it'll give you the continuous move into it. So at this point, I was trading the break of the downtrend here, and the moving average that flipped over. I mean, obviously if this thing had popped up here, I would have been out of this position, but I just held it, and I really didn't expect this kind of move, but it was really thankful. There's support down here in this area. JNUG, just off the top of my head, $31.25. There's support down here. You can see it, support down here, all the way down here, all the way here, resistance, resistance, resistance. So off the top of my head, support, $31.25. You trade them long enough, you'll have these numbers in your head all the way here. You'll have these numbers that'll make sense to you, like UVXY. See, all the way down here in JNUG, I can move this chart all the way across, all the way across. Just support all the way here. Just the top of my head, I can know, you know, I know, especially in these ETFs, I just got them down, where I know that certain numbers are strong numbers, like in UVXY 2650, 2750, and when it goes over the 30, it's gonna hit 32, 34, 36. So it's just certain numbers that I know off the top of my head on these, because I've been trading these for a while and I'm really good at the ETFs. Alright, yeah, I gotta run too, guys, but it's been an hour and 14 minutes. We had 56 people, I think, altogether, so that was pretty good. Thank you guys so much for your time. Hopefully you learned something. At least, you know, I like to sit down and chat with you guys a little bit. You know, even if it's not a you know, a really well planned out webinar, my bad. At least we get some stuff done and we get to talk a little bit, right? Because this is our business, and if we got to learn something sometimes, so talking to each other helps. I learn just by talking to you guys too. So thank you so much, everybody, and please, you know, let's retweet for next week so we could try to get more and more and more people in and have like the biggest Wednesday webinars ever. Yes, sir, Terry. Go take a chill pill. I'll see you guys all tomorrow in the room. Take care. Good night.